but no, I just like shiny. And this is a wine colored satin suit. So that's why I got it. And then he said, beginning of tax season again. Yes. And speaking of tax season, we've got a CPA, Joe Mastrano, that does a really good job with taxes. He was on the show this time last year. And actually, I've got his information still up here from before. So if you guys are looking for, oh, nope, that is Sarah. Hold on. We should still have Joe Mastrano information up here. So there it is. Joe Mastrano's information up there, more for taxation and IRS information. So if you would like to learn anything about your taxation this upcoming year, you want to grab that email, send him a message, and then let him know that this and that told you to stop by because they will give you I do believe, 10% discount on services if you mention that you got his information from this podcast. So I just wanted to throw that out there real quick. And then Michael said, and he said all of that on one breath. I take deep breaths, deep breaths, and then I talk very fast. Greetings, humans. Forget me. Leave me in the corner. Now, Michael's watching the comment section on YouTube side of things. So if you guys keep your comments appropriate, you can chime in. I really appreciate it if you do. And if those comments get a little bit out of line, he has put some people in timeout. So, just note we do have individuals that stop by that aren't quite over the age of 18, and they do come through here to come and learn some stuff. So I want to make sure that you guys keep the comments clean for when they do slide in. Does he have a book out? Does Joe Mastrano have a book out? Do I have a book out? Well, I still have this book. This isn't an investment book though. I can actually grab you the investment books. They're not here. They're over on the other shelf. I can go ahead and grab the investment books. How to invest in how to retire off of dividends in with 8%. That was Tim Owens had wrote that book, and then Alice in Cryptoland. So those were some books that I do have in my collection. But this book here, the Bodaciously True Story, this is from Chris or yeah, Chris Orcutt, and he typed this bad boy by hand. And yeah, he's I've been going through this book, and he's got the 80s down pat. So if you want to reminisce, if you're a reader and you want to reminisce, he also has an audio file. I'm going to be getting a link because the book is starting to be sold in November. So I'm going to be getting a link to that and giving it to you guys as soon as it happens. He said I had to get the ad in. What's the cost? From what I understand, this book is 19.95 for the book, and I think the ebook might be a little bit cheaper. So I'm going to be getting the exact book and the exact amount as soon as the book goes live. I'm going to be letting you guys know about it. So make sure that you hang out because I know that you're going to want to read it if you're a reader. I'm loving it myself. So and I'm going to be getting the whole collection because since I'm promoting his book on the show, all 9 books over the next 2 years I'm going to be getting, and it's actually a family business because he's writing the books and his wife is promoting those books. So I think it's fantastic. So she reached out to me and she's like, by the way, I'm not Chris, I'm his wife. I'm what? See, behind every good man is a good woman because she is help. This is that their relationship is exactly what I be talking about. I don't know what the fuck she does for a living, but I also know that she's a promoter because she is promoting her husband's book. He's sitting at the house all day, every day, and his salary is typing up this book and putting it up for sale. She's gonna make extra money off of whatever the heck he does because she's promoting the book everywhere, getting sponsorships, all of this other stuff. Their standard of living is based off of how much they work together to make his book successful on top of whatever else she does for a living. Those are the types of relationships that we have forgotten about here in 2025. So Gen Zs don't know anything about what this type of lifestyle is about. And that's what I be pushing for when I'm giving you guys the information that I give you. So I'm glad that Michael brought it up because that dynamic is exactly the thing. He's a writer. She's a salesperson. They came together. She's selling his stuff, and they are making money together. That's a good investment. And yes, learning about the 80s, learning how to improvise, learning how to come above the technology, stop being so dependent. That is actually good investments for the mind. Behind a great woman is he said behind a great woman is a weak man. Well, that's not actually true. Um, Fundamentally, uh, while women have more advantages in society, and we're about to get into the stock options in just a moment, but I just want to cover this real quick. While women have more advantages in modern society to be successful because they have come from a legacy of being underprivileged. Those females, no, you're not in trouble. I just want to be clear because I'm a man of uniformity and I want to make sure that the ladies know that that's not the case. Actually, that's what they believe, though. They believe that the men that support women are weak. The men that are supported by women are weak. And that's not true. The fact is that the women get ahead in life because there are certain people, old school folks, only do business with men. There are certain people that try to get over on women because they think women are stupid when women are not stupid. There are people that are not willing to compromise. There are men that are not willing to negotiate. And these dynamics make it harder for women to succeed in negotiations. Now, going to work and following instructions and locking things in, yeah, they can do that really well. But when it comes down to negotiating, usually women have to have leverage and they're devalued just because they're women, not because they're not good enough. And then when the women show their skill set, when the women bail out the man from his mistakes, that's when the men respect the women. And that usually comes from the support of a man somewhere. It is what it is. It's like if I was to walk into a podcast of just women and I would start talking my opinions as a man. The first thing they would do is devalue me because I'm a man. They would say I'm misogynistic. They would say that I'm sexist, all this, that, and the other, because I'm a man, not because I'm wrong, you know. And that's one of the things that we have to recognize. Yes, they got boobs, but the understanding is that they can be just as successful as a man, if not more successful, because the affirmative action laws for men are still they are not there anymore, but the affirmative action laws for women are still there. So women can still be promoted just because they're women. They can get hired just because they're women. They can work their way up the corporate ladder if they don't have any scandals against them with HR, just because they're women, and the company is required to have a certain number of women in certain positions of leadership in order to not get hit with those affirmative action laws. And when they start grabbing diversity, if you start getting minority women, you cover the minority requirement and you cover the female requirement at the same time. So you don't actually have to hire a man. You just have to hire a minority woman. So you got a black woman, an Italian woman, a Mexican woman. You filled the status quo. You see what I'm saying? Two birds with one stone, because you're getting the diversity and you're getting the gender fulfillment at the same time. So men don't have a leg to stand on. A man has to get got because he is that damn good. He can't just get in there because there aren't enough of them on the roster, which is the way we used to succeed back in the day. Minorities, when affirmative action first came out, you didn't have enough black men on the payroll. I got hired because you needed black men on the payroll. You didn't have enough black men in management. I got promoted because you fired your last black man. That's how we got through back in the day. Now you got to have skills, and these folks don't have skills, and that's why I'm teaching guys how to make, save, and invest money. But in modern times, and I'm about to get on the stock thing, but ladies, they want a man that will help push the woman's drive to go to college and make herself successful, to push the women's drive so that she can um, get herself uh, 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 a good position in her career. So if she has to quit her job to go to college and get the degree so that she can then get picked up on the law firm she wants to be on, she wants her man to support her until she gets there. And that's fair of a request, but no man can ask for the same and say, hey, well, once you become a lawyer, I want to quit my job and spend 4 to 6 years in college and then try to see if I can get myself a better job, because the first 2 years in, where he's living off of her salary plus whatever he gets from his student loans, that relationship is not going to be as it was when she was staying at home and going to school and studying and he was making all the money. The relationship is not going to be the same. I don't understand why it can't be the same, but it's not going to be the same. So I just wanted to cover that real quick. But what if you could generate a stream of extra income from the stock market in just the last 2 months of 2025? I'm going to be honest with you. I just made a shit ton of money just today. In the next 2 hours, we're going to be scheduling a sale for Wednesday. So that, and I got to wait until like 2, 3 o'clock in the morning to set it up because I don't want the sale to happen early because PSCC has an ex dividend date of the 29th. And I want to make sure that at 9 o'clock in the morning, when the stock market opens Eastern Standard Time, that it is on the books for one of the first sales that happens. So I could get paid twice. It's a pretty compelling idea, especially while the government is shut down, right? As the year winds down, maybe you're thinking about holiday shopping, unless you've been unemployed for the last 30 days. You might be thinking about getting a jump on the new year since you don't have a job. You're trying to start knocking out some of your New Year's resolutions, or just trying to make your money work a little harder because your ass ain't getting paid from the government right now since you got furloughed on the first. This is where you'll start hearing about strategies that are called dividend capture. I've been talking to y'all about that since about May of this year. The idea is sound, and it sounds almost too good to be true, but I've been proving it all year that it is effective and it does work. Buy a stock, collect the dividends, sell the stock, and move on. In a thriving market, you can buy the stock a little bit early, 5 to 7 days early, hold it, watch the rise, then sell. You're selling on a premium. When the stocks are on a rapid decline, you want to buy right before the ex dividend date, 1 or 2 days before the ex dividend date, and then sell it on the ex dividend date so that you don't lose as much on the decline. Certain stocks that are negatively impacted by the crash, by the shutdown, are stocks that will decline faster than stocks that are not negatively impacted by the decline, which is why I was talking to you guys on Monday for the last few Mondays about what's going on in government. Because if you're investing in hotel stock and the hotels aren't getting as much customers, if you're investing in jets, if JetBlue or other airlines, if you're investing in cruise ships, those stocks are going to be falling because nobody's traveling, because nobody's getting paid, because the government is shut down. When you think about the stuff that's happening, you think about how your money is impacted by it, right? And this is going to promise a quick and steady cash flow, but it is not an overnight rags to riches situation. And here's the reality check: most people who try this particular situation get burned if they're not doing it correctly. They get drawn in by the promise of easy money and then get blindsided by one critical market mechanism like the government shutdown. They end up losing more on the stock's price dropping than they ever made from the dividends. And they walk away convinced the whole thing is a scam because they tried it one time, they got pinched, and they just gave up. If you went in there with $10,000, did the trade, walked out with $9,000, and you made like $500 worth of dividends on it, you lost $500 overall. And usually around that time, some people are like, bump this and walk away. No, they're not totally wrong, but they're missing the nuance. The strategy itself isn't a scam. The way most people do it is just guaranteed to fail because they're not doing it effectively. In tonight's show, I'm not just going to give you the textbook definition of the dividend capture rotation because I gave you that several months ago. I'm going to share with you my personal detailed dividend capture calendar for November and December of 2025. And we're going to be updating the December calendar closer to December because we have some projections right now, but we're going to be giving you some exacts for December. Right now, I've got the exacts for November. Michael says, my favorite stocks are your watches, gold, silver, anything of value. Oh yeah, my watches are the best ones to grab right now because those are the stocks that are the cheapest ones to get into. Let me put them up there real quick. You see all of these stocks that are rolling across the bottom. These are the lowest ones. Usually, be under all. Most of them are under $25. And that's the best part. A lot of them I started finding were under $10, and a few of them are under $5, which is identified as a penny stock. And these are the ones that you can put the largest quantity of capital or the smallest quantity of capital in and get the largest amount of return. So my watches that I'm paying attention to, those are the most fantastic ones to get. And when you start, for example, if you're doing a dividend capture rotation and you're doing the core satellite rotation, and then you decide to take the ex dividends out of your portfolio and go buy silver and trade it against gold. When silver is up, gold is down. So you sell silver, buy gold. When gold is up and silver is down, you sell gold and buy silver. And then you're doing trades with gold and silver. But you can do trades with gold and silver ETFs and add gold and silver ETFs to your stock portfolio. And he says anything of value on top of that. If the shutdown continues through the holidays, even into the New Year's, people will sell anything. Oh, you ain't lying. You ain't lying. If the shutdown lasts for 3 more weeks, we don't have Thanksgiving. If the shutdown lasts 4 more weeks, who the fuck you think is putting up the damn Christmas tree in New York? Because the government workers put up the Christmas trees, and government workers that are not considered essential don't have a job. You're lucky if the trash man is picking up trash in New York right now with them setting everything on fire because of ISIS. So there's a lot going on around here. Okay. And then people don't think about the other half of this, right? There's a lot going on. Me myself, I'm gonna have me a fantastic Thanksgiving. I'm gonna love the love that I got. But we're gonna be going to um we're gonna get deeper into this. We're gonna go way beyond the basics when we're talking about the dividend rotation strategy today, the dividend capture strategy. We're breaking down the specific stocks that I'm targeting, high yield names like AGNC, Orchid Island, Zim stocks. We're going to be talking about those. And I'll walk you through the exact dates, my reasoning, and the step by step process for scheduling these trades. So I want you guys to stay tuned to this. And during the show, I will be putting these tickers on the screen. Now, the downside used to be because when I edit out the first 15 minutes of the show, it takes out the comment section. Now that I've got the comment section right here, when I put it up in the comment section, if you replay the show, those tickers are going to be in the list. So you can just write them down when you go back and watch the show again, and you will be able to grab a few of these and use them to your own advantage. Do your own research, proofread, verify. My information is peer reviewed because Michael will fact check. The same way he fact checked Kansas City versus Sacramento the other day, he will fact check. I cannot be wrong because if I am wrong, he will point it out. But if I'm not wrong, he will verify it. So you got two different sources of information on the same podcast. We make sure that you get the exact truth in the moment. So, like I said before, the values for the tickers down below have not been updated, but those are the in fact tickers that we are following today. So go back and look at those tickers, look at the values, and verify the values as they are in real time. Determine which ones you want to buy into, and then make the necessary trades that you need to make. He says, "You mean Scrooge moved it to the Oval Office?" No, no, I can't. What? Hold on. What he's like the what is Steven Seagal from the Casino Heist, Casino Royale, I think it was. Um, when they took that bank hostage for all its money, and the whole movie, like, nobody's leaving until I get this money. And I think he got away. Like, that's what we're dealing with right now. You got a billionaire in an argument about money. He wants to be right, and he can wait until you give up because he's not poor. When your poor constituents make you fold, when you quit, he's going to get unconditional surrender from you because he can wait. Everybody in Congress is getting a paycheck separate from the government because the Congress is not in the the budgeting plan that we're arguing about. So those 500 something guys, they can argue this until February if they want to. If they wait too long, they're going to be arguing about the 2025 budget for taxation in addition to their quarter four budget. They froze on a quarter four budget. They still got their quarter one budget for next year to debate about. So in like 15 days, they're going to be putting everything together and coming up to an agreement that should be able to start the new year off without fail. But you never know. They might hold it until January 18th. We'll start taxation late, but we still have a due date of April 15th. Ain't shit else we can do about that. You just gotta check in and check out, right? Now the goal here isn't to chase every single dividend that is out there because that's ridiculous. The goal is to build a strategic plan that aims for consistent income before 2026 hits, especially since some of y'all is broke as fuck. This is a trading strategy, again, not a get rich quick scheme. So I want you guys to grab a notepad, open up a spreadsheet, do a side by side app real quick, and let's build this calendar together. Before we start plugging in tickers into the calendar, we have to be on the same page. It's absolutely critical to understand how dividends work and, more importantly, why the common approach to capturing them is a losing game from the start. A lot of videos gloss over this part, but we're going to break it down yet again because understanding the problem is the only way to solve it. First, let's cover the four key dates in the life of any dividend payment. Think of these as the rules to the game. The declaration date. This is just the day the company announces that they're paying the dividends. Until the declaration date, you cannot be sure what the ex dividend date is. What you can be sure is that unless the company flops, an ex dividend date is coming. Now, what some people do is project the ex dividend date. It's called a forecast based on historical events, the quarterly date, if it's been on the same date every month, or if it was within a certain range, like if it was on the third Wednesday of every month, even though the date varied, if it's on the third Wednesday of every month, you expect it to be on the third Wednesday of the upcoming month. If it's an annual thing, you might not see the annualization, but you will see at some point it's going to announce it. So that's a declaration date, right? They'll state the amounts. So that's when you can guarantee that whatever the amount used to be is the amount you're going to get, or if it increased or decreased since the last payout, and any other key dates that they're going to give you, like the payout dates. For us, this is just a heads up that a stock is now in play, right? The ex dividend date or the X date. This is without a doubt the most important date for our strategy because the X just means without. If you buy stock on or after its ex dividend date, you will not get the upcoming dividend. To get paid, you have to own the stock before the market opens on the X date. So PSEC has an X date of the 29th. You had to already own the stock, which means you would have no later than the 28th bought the stock and owned the stock on the 28th. If you made a mistake and bought the stock on the 27th, scheduled it on the 28th to sell, and it's sold on the 28th, you don't own it on the 29th. You don't get the dividends. Okay. So this means buying it at the last one full trading day before, this is going to be that cutoff. And you have to be careful with this because if the ex dividend date is on a weekend, like a Sunday, you still have to have it like Thursday, Friday at the latest because there's no trades happening on Saturday. Remember a couple of weeks ago, we had a financial holiday. If your ex dividend date happens on a Monday, but it is a financial holiday, there's no trades happening on Monday, which means Thursday or Friday you would have to pick up the stock and have it so that the first trade day, Tuesday, the day after the ex-dividend date, you can sell. You got to pay attention to these things. Now, the record date, this is most likely just paperwork for the company, but it usually is the date after the ex-dividend date. The company takes a snapshot of its records to see who officially gets the dividends. As long as you bought before the X date, you're on this list. Now, the payment date, that's payday. This is when the money actually shows up in your brokerage account. It is not always the same day of the ex dividend date. It is not always the day that you bought it. Sometimes it's a few days later. Sometimes it's a few weeks later. Sometimes you buy it this month, get paid next month, same day. It depends on the stock. However, to be clear, you do not need to hold the stock until the pay date to get paid. You just need to hold the stock until the day of the ex dividend date to get paid. After that, you can sell it. Now, if you want to ride the wave on it, or if you're doing a buy and hold with it and you're just going to finagle it a little bit, then that's fine. But if you're just there for the dividends, you want to get it the day before or 2 days before in some situations, and then get rid of it the day of, preferably before lunch, because usually on the ex dividend date, a lot of people are selling, which is why you see that dip. Now, it can be a few days or even a few weeks. You just got to make sure that you pay attention to the payday happens eventually. With those days clear, let's talk about the giant problem that trips everyone up. What doesn't everybody, or why doesn't everybody just buy a high yield stock the day before the ex dividend date, hold it for 24 hours, collect the free money? The answer is a little concept from finance called the efficient market hypothesis. Basically, the theory says that all public information, like a scheduled dividend payment, is already baked into a stock price. A dividend isn't magic money. It's a direct transfer of cash from the company's bank account to its shareholders. If a company has $1 billion and pays out 100 million in dividends, it now has about $900 million in the company. The company is literally worth less after the payment. The stock market knows this. So, on the morning of the ex dividend date, the stock's price will almost always drop by an amount roughly equal to the ex dividend amount. So, if a stock is $50 and it's going to pay a $1 dividend, you can expect it to open for trading on the ex dividend day right around $49. So, let's make it real with an example. You want to capture that $1 dividend on that $50 stock. You buy 100 shares the day before the ex dividend date. Total cost around $5,000. The next morning is the ex date. You're now officially owed the dividends, 100 shares times $1 gets you $100, right? Fantastic. But just as expected, the stock price dropped from 50 to 49. Your shares, 100 of them, are now worth $4,900. You decided to sell immediately, just like the simple capture plan says. You sell for 4,900, and what's your final score? You lost $100 on the stock, but you gained $100 from the dividend. So your net profit is a zero sum game in that situation. And that has happened before, but you'll find that more often than not, that's not going to be the case. Michael says, is the dividend the same if you held it instead of selling all the time? Yes, the dividend amount is the amount of money that you're supposed to get paid because you were in possession of the stock on the ex dividend date. The reason why we sell is because a quarterly stock pays once every 3 months. If you offset several different stocks that pay quarterly every month, say one stock pays 1, 4, 7, 10, the other stock pays 2, 5, 9, 11, another stock pays 3, 6, 9, 12. You're ultimately going from one quarterly stock to the next quarterly stock every month, and you're picking up three times the shares off of that one hold. That's what the dividend trade does. You can buy monthly dividend paying stocks, and those are the stocks that you just buy and hold, because why would you buy it, sell it, and then buy it back next month and sell it? The only reason why you're going to sell a stock is because you're going to take that exact same value, put it into another stock to get more dividends in the same trade. He said $100 minus commission. Okay, so commission depends upon how you trade. If you're trading on Wall Street where you've got your broker that you call and tell them what to buy and sell and stuff like that, you have to meticulously decide to move money because they're going to charge you per trade or charge you per transaction, whatever the case may be. If you're using fintech apps, special shout out to Fintech 101. If you're using fintech apps, certain ones like Acorn, TD Ameritrade, and other such apps might have a trading fee. And the quantity of trades that you do will be dependent upon how much you're going to make off of this stock versus how much you're going to have to pay to make the trade. Because some charge you for both the buy and the sell, some just charge you for one. And apps like Stash App, STASHAPP, they only charge you a $3 monthly service fee for using the app with unlimited trades. So the difference between paying $3 for one trade versus paying $3 for 30 trades is how many trades you do. So if you can make more than $3 in profits off of your trades using Stash App, then the $3 pays for itself. So you have to make sure that whichever trading platform you're using when you're trying to do the dividend rotation strategy is a platform that favors a a flat rate fee or a no commission per trade kind of scenario. I get it now. It's also free up your money too. Nice idea. I wish I had thought of that. That's what we're doing here on this and that, because this is common knowledge that has been around for years, but a lot of us don't know because we don't have old folks telling us how to live life. We are figuring it out as we go along. And once we find out, first time in forever, then we wish we would have known this 10, 20, 30 years ago. We would have been doing this, mastered it, gotten good at it, and been making a ton of cash off of it. So you do have to realize, yeah, like Michael said, there is going to be the talk of trading fees and taxation. And because whenever you make a profit, the Uncle Sam, Donald Trump, they're going to want their money. And this can easily turn a good portfolio return into a break even trade, and sometimes even a loss if you didn't make enough money. This is the trap, right? The market is designed to prevent easy arbitrage. Profit in the dividend capture game doesn't come from collecting the dividend, it comes from successfully trading the price recovery after the X date. The real work happens after the dividend is locked in. Now, there are some stocks that far exceed. This is where my method makes more sense. When you see the stock on the decline, you buy in while it's low. Then usually a lot of people buy in closer to the ex dividend date. So, a couple days before the ex dividend date, while it's low, if you bought in when everyone else buys in, just like PSEC, I think just went up like 30 cents, 20 or 30 cents. Fine. It only paid if it went up 10 cents, doesn't matter, because if it went up 30 cents from when I bought in, and it's going to take 5 cents a share off the top, I get 25 cents a share based on what I bought in versus the 5 cent dip. That's what I'm playing against. I'm not playing against the stock market. I'm playing against everyone else who's trying to get in on the same dividend capture rotation. It's a timing game. If remember I told you guys that if you're at the beginning of the wave, as the wave carries, you get the most out of it. Everyone else that follows that lead, those individuals are going to get whatever's left. The last person to buy is the one that gets the least. The last person to sell is the one that loses the most. The first person to buy has the best opportunity to get the most out of it. The first person to sell is the one that has the highest opportunity to keep the most in their pocket. You're not trying to be greedy. If the baseline is here, you want to be over here somewhere. And if the top line is here, you want to be over here somewhere. It's okay if you leave a little bit on the table because a lot of the greediest people in the world call it a loss when there is more money potentially able to be gained on the table. I call it a victory when you didn't lose your damn money. I call it a victory when you're walking away with more than what you started with. Even if it's not as much as what you could have gotten, it's more than what you did have. And that's what you need to be paying attention to. Now, as you improve the process, you start getting better at watching the trades. You start getting better at watching the trends. You start getting better at seeing the difference in the monetary values and you start making better trades. As you get better at it, your gains are larger, offsetting your losses. But even the best traders are going to have bad days and they're going to lose something. But at the end of the year, if you've gained more than you've lost, you have gained taxable income. Now, if the market automatically subtracts the dividend from the stock price, how can we possibly win? He said, what, 25 per share? Yeah, roughly. Yeah, that's what I'd be getting back. This is where we stop being simple collectors and start being strategic traders. Our success isn't about the dividend itself, it's about finding stocks that tend to recover their share price quickly after that automatic drop or completely overshoot it so that we don't have to worry about that automatic drop. Why would the stock bounce back? Well, a few things can help. Strong momentum, because the stock might just be in a hot uptrend right before the ex dividend date, and the overall buying pressure is stronger than the small dip from the dividend. The big money buyers, if a lot of hedge funds and institutions own a stock, they might see that post dividend dip as a small discount and use it as a chance to buy more, which gives me the ability to sell and get more. And high volatility. Sometimes a stock normally has a daily price that swings or just a little bit bigger than the dividend itself, giving it a chance to swing back into the green by random chance. And we gauge those in our benefit. Always ride the crest. That is right. A loyal fan base, just like those who watch this podcast. Certain high yield stocks, especially monthly payers, have a dedicated group of income investors who are always reinvesting their dividends, creating a predictable little bit of buying pressure. Our job is to build a calendar that populates a list of carefully chosen stocks that we think have a good shot at a quick price recovery. For the end of 2025, we're going to focus on a handful of high yield monthlies and quarterly payers. The core of our strategy is a detailed spreadsheet, and this is going to make our home base more successful. Here is the columns that we're going to be using. I'm going to be giving you a couple of these. He said, it's like chess. You may see the move, but the other players may not. Yeah, that's true because a lot of times we have players that they don't see the move right in front of their face, and you're just hoping they don't catch it. Because if they don't catch it, you win. First ticker symbol, AGNC. It's a monthly, it's a monthly stock, and the approximate annual dividend yield is going to be defined closer to the ex dividend date and the ex-dividend date is going to be the one defined by the announcement. And then we have to estimate for November and December, based on the company's history, what it's going to give us. Now, this is not a guarantee until they come and tell us what's going on. By the buy dates is the trading day right before the estimated ex dividend date. That's when we're supposed to be putting our money down. This is our auction day. Dividend amounts are the per share amounts, and that is going to be the expected payout, what we think we're going to get. And the target exit price is vital because we need a plan to get out. This could be our buy-in price or maybe a penny higher to lock in a tiny profit on the shares themselves. So when we sell the shares, we can get a little bit on top of the sale as well as the ex dividend. That way, we're walking away with two wins. Now, some notes and rationale that you need to have. Why the stock? Why are the risks? Or what are the risks? These are things you need to pay attention to. Now, let's start building a calendar by looking at our first few targets. AGNC Investment Corp, Orchid Island Capital, and them integrated shipping. These are some of the stocks I want to give you guys to start off. And then later I'm going to be giving you the calendar that I've made for this month so that if you were interested in following some of these stocks, you can do so. They said, would the government shutdown affect your well, it's not a scheme, and no. So when the market was on a rise between June and August, going into September, if you bought 7 days before an ex-dividend date, you could benefit from an increase, 50 cents to $2 per share. You could sell the stock, get an increase per share on the stock value, and then later on that month or later on the following month, get the ex-dividend on top of that, where we were making almost $1,000 to $2,000 a month using $5,000 and $10,000 worth of trading capital. Now, during the shutdown, when certain shares are on the decline, you would buy closer to the ex dividend date so that you would not experience as much of the financial loss. There are still people that are investing in stocks regardless of the decline for two reasons. One, because they are going to benefit from the cheaper price per share, but two, because any loss that they get right now, remember I told you you have a tax deduction of up to $3,400 worth of investment loss from stock options. So this allows you to deliberately trade at a loss and not have to pay as much taxes. Now, that doesn't change the fact that if you made more than $3,400 worth of capital this year, you're going to have to pay taxes on something, but you can throw away a little bit of financial loss on purpose, still get the dividend, and have a little bit of a tax deduction at the same time. So it doesn't impact the government shutdown, doesn't hurt your dividend rotation strategy. It does hurt your short term buy and sell if your goal is growth, if you're buying high and selling low. But if you're buying high and you're reasonably selling low where it's not that low, but it is smaller than the dividend that you're getting, for example, if you bought uh, if you bought a certain quantity of shares with $1,000 where you lost like $5 on the whole quantity of shares that you're selling, but the dividend was $50. Well, since you lost $5 on the whole thing, you gained $50 on the ex dividend. You actually made a $45 return because you're going to get the difference between the loss versus the gain. So since you only got 45, that's the difference. You still profited $45. So while the government's causing the decline on the stocks, it doesn't hurt it that much. It can still be done. You just got to pay attention to how long you leave your money in a declining stock. Now, November is a busy month for dividends and will be the first real test of our calendar strategy for this month because we've been giving you a monthly calendar since May to follow. So every month, the last week of the month, we give you a dividend capture strategy for the upcoming 2 months so that you can follow along and prepare to make your trades. Add your money to the stock options early so that you can put down on whatever stocks you want to have when it's time to throw your money down, buying and selling, setting calendars, and reminding yourself uh, uh, via calendar. Don't forget to make that sell. You don't want to be at the club shoe shooing with a female, and then all of a sudden, or ladies, you don't want to be at a club on ladies' night shoe shooing with your homegirls, and then wake up late in the morning and you forgot to put that trade out there, and then you lost out on the ex dividend date. Is it just washes itself? It's possible, yes. You can wash your money so that you can collect some successful tax credits, but you can also have financial gains throughout the year and then take some financial losses towards the end of the year so that you don't owe Uncle Sam any money, but you still have a surplus of money throughout the middle of the year. So let's focus on a couple of key monthly payers. First case study is AGNC Investment Corp. That's one of the ones that we're going to be talking about. Who are they? AGNC is a mortgage real estate investment trust or an MREIT. They don't own buildings, they only owe the mortgage debt mostly. And this is government backed. They got hit this month. Uh, they make money on the interest rate spread. Okay. Why the high yield? Mortgage REITs have to pay out most of their income to shareholders to keep their tax status, leading to huge yields. AGNC yield is often around 15%. When I first started collecting these dividend rotation strategies, I was determined to grab yields 15 to 20% and under $10 when we first started doing this. And this is one of them. But this is going to come with a risk because they are super sensitive to interest rate changes. When interest rates go up, not always in their favor. When interest rate go down, sometimes in their favor, which can crush their business model without warning. It's been stable for the last 10 or 20 years. We haven't really seen much of a negative impact. I know some of the real estate investment trusts have seen a decline over the past 5 to 10 years, like Orchid Island. Went down from as far back, I think Michael told me was like $30 back in the day, and now it's like seven. That's fine. We didn't have it when it was $30. We had it when it was seven. So we're enjoying the upswing. The November 2025 play being a monthly stock with a 15% annual yield, the ex dividend date. Looking at past years, AGNC usually goes ex dividend near the end of the month, so we can pencil in an estimate of maybe Friday, November 28th. But I'm going to give you the exact date towards the end of tonight's show, so make sure that you swing with us. The buy date in that particular situation to get the dividend would have to be owned before the 28th, which would be like the 27th. So the buy date would be that Thursday, November 27th. Keep in mind though, with Thanksgiving in that area, there's a strong possibility that the markets close that day, right? The United States doesn't trade money on Thanksgiving. This is a perfect example of why you must check your calendars. So the real buy date is not Thursday because you're not going to make any trades on Thursday. It's going to be Wednesday, the 26th, so that you can have it before Friday, the 28th, right? The dividend amount for AGNC has been a steady 12%, 12 cents per share each month. And AGNC was I looked at it, it was $9.60, but right now it could be different. And if it was trading at $9.60 on the 26th, if you put up $5,000, you buy about 520 shares. And on the morning of the 28th, you would be expecting the stock market to open around $9.48. And our goal for the stocks, natural momentum, is to push back to our entry of about $9.60. So we could set a limit and sell the order for about $9.61. If it hits, we make a tiny capital gain of $5.20 and capture the dividend of $62.40, where we're up and we're up again. And that's a total pre-tax profit of $67.60. So we haven't gotten taxed yet. Now, the risk to this scenario is the stock might not recover. Bad news about interest rates could hit, and AGNC could drop to $9.40 or lower. Then we're stuck choosing between selling for a loss that wipes out the dividend or being forced to hold stock long term, trying to uh, wait for our cash to come up. By it being a monthly stock, if you bought into it and it didn't bounce back, it didn't recover, you can hold. So instead of taking a financial loss, you can just hold it. And then when it bounces back, you can sell it later or leave it there for next month because it's a monthly stock. Case number two, Orchid Island, Orchid Island Capital. They are also a monthly stock. This is another monthly paying mortgage real estate investment trust. A lot like AGNC, but often seen as even riskier and more volatile. Why the even higher yield? Orchid Island has been holding the yield that pushes 18 to 22% or higher, which is the market's way of telling you it is extremely risky. But I mean, let's face it. As we said before, it went from 30 down to 7. Huge risk. The stock can swing wildly. Its dividends hasn't been as stable as AGNC over the years. November's 2025 play, by this one being a monthly stock, estimating around 18% annual yield, the ex dividend date for Orchid Island tends to also go around the end of the month. So we're going to estimate this one also being around November 28th. We could split our investment portfolio and put some money on AGNC and put some money on Orchid Island. Or if we were going to decide between the two, we could go all in on Orchid Island and ride the wave of volatility, get extra returns in comparison to the safe bet of AGNC with a slow, steady incline, whichever one you decide to do. Now, the buy date, same as AGNC, has an actual buy date of Wednesday, November 26th, because of that holiday. Now, with Orchid Island, the current paying is also 12% shares, just like AGNC, but the trading amount is smaller. Since the dates overlap with AGNC, we will choose. So let's say we put another $5,000 into Orchid Island. If it's trading at about $8, which is less than AGNC, we buy 625 shares. On the X date, we expect to see an opening of around 788, and the strategy is the same. We sell the order and hope that it recovers to $8, and we try to get a little bit above. If it works, we've captured another $75. If we put 5,000 on Orchid Island and 5,000 more on AGNC, we just put down $10,000 and we made what 62 to $65 on one stock and 75 on the other, which is $140 off of $10,000 going into two different stocks. The risk here is magnified because a high yield is often a warning sign. Orchid Island could easily drop far more than the dividend payment, leaving us with a significant loss. This is a classic high risk, high reward play, filling out the November calendar. He said, "Oh, only take high risks if you can afford it." You're right. You're exactly right. Let's add a couple of more to this schedule, and we're gonna kind of work these things out because Prospect Capital, PSEC, that's the one that's due tomorrow or today, actually. This is a business development company, a BDC, that also pays monthly. Historically, its ex dividend date is near the end of the month, along with the other two. We could estimate an ex dividend date of Wednesday, November 26th, just like the other ones. And this means that we're probably going to be buying on Tuesday the 25th. And this is going to give us a trade day to manage before Thanksgiving's crunch with AGNC and Orchid Island. Now, what sucks about having them so close together? If we were supposed to have a buy and hold of P or buy and sell or PSEC, the money usually doesn't clear for a day or two after we sell. If we buy on the 25th and hold PSEC on the 26th, we cannot sell PSEC on the 26th, buy Orchid Island on the 26th so that we can hold it for the 27th. So if we were able to buy PSEC before Orchid Island, there's a strong possibility that buying PSEC could allow us to buy it on its date because our PSEC date is the 29th. If it clears on the 30th and we're allowed to buy in this week for the ex dividend date for AGNC or Orchid Island for the 30th, then we could sell PSEC, buy Orchid Island, get the ex dividend date for Orchid Island, and then walk into the next month. And that's like back to back. But that only happens when you have verified that the ex dividend date is 2 or 3 days away from another ex dividend date because you have to buy it before the ex dividend date. If they're 48 hours away from one another, you don't have enough time for the money to clear. You still have to pick which one you're going to grab, right? But um, Prospect Capital is worth like $2.85, almost $3 a share, which is half the value of um, Orchid Island and a third of the value of AGNC. So while AGNC was like 550 or 560 shares, PSEC for the same quantity of $5,000 would have been giving you closer to 15 or 1600 shares, but it's paying 5 cents a share. So you would get 10 cents for every two shares, so about 750. Uh, uh, well, if you cut it in half, uh, 10 cents for 750 would be like $750 or $75. $75 for 1,500 shares, which is almost the same amount that you would have gotten from Orchid Island. So think about that. But PSEC goes up from its ex dividend date, so you might see 80 to 82. Um, Gladstone Commercial, GOOD, that's another one. Oh, look, I wasn't putting these up there. I'm gonna put them up there later. I'm gonna give you some more of these. A monthly payer as well. So this would be the fourth monthly payer. Matter of fact, let me just go ahead and put these up here real quick because these are the AGNC, Orchid Island, PSCC are all monthly payers. So I want you guys to pay attention to the monthly payers because when you're building your portfolio, your core satellite portfolio, if you were trying to get your buy and holds out of the way, these would be the ones that you would grab. And it would be like you would buy and hold them. You wouldn't even have to worry about it. You just buy and hold these, and then if you're going to do a dividend rotation, you're going to do a dividend rotation on some of the other ones. But these would be ones that you would put if you put $5,000 towards each one. You just put $5,000 towards each one, and you just leave it, and then you sell it when you're going to sell it. Wait, where is there? It is AGNC. I want to make sure that you got all of these. So far, because right now we're about to talk about Gladstone Commercial, and that would be one, two, three, four stocks that you should have under your belt. And if you don't, go get them. Okay. And then let me go ahead and give it to you guys over on Twitter side because Twitch, you guys have gotten it. I want to make sure that y'all have these. Now, Gladstone's got a yield that is a little bit lower because when I started grabbing all the ones that were 15% or higher. And then I found Gladstone with another monthly. And I was like, let's build around some monthlies because it's still a low value stock. You buy it cheaper and you still get your money's worth out of it. It's got 8%. But some people find physical real estate more stable. You know, their ex dividend is usually mid-month. Right. Remember to like and subscribe. And if you've got time, join a membership, share it with somebody that you know. We're halfway through this. So we're going to be able to crush this in the next 30 minutes, 35 minutes. And we're going to estimate the buy date of Friday, November 14th for the potential ex dividend date of Monday, November 17th. Now, November's calendar is looking more like a planned campaign with the trades spaced throughout the month. So I'm going to be telling you, I'm going to be towards the end of this giving you a full list of which ones to grab and which ones to get rid of in sequence for November so that you can follow along with this and as well going into December. Now, December is going to give us another round of monthly payouts, a chance to trade one of the wildest dividend stocks out there, which is Zim Integrated Shipping. Now, this is a quarterly stock, but Zim gave us a good return in August, I do believe, but we skipped over it the last time we talked about it because the very last one was a very low return, so we didn't buy into it that time. We skipped over it and we bought something else. Uh, who is Zim? Zim is a global cargo shipping company. So why the crazy dividends? Zim's profits are tied to global shipping rates, which sometimes sucks. When supply trains went crazy in 2021 and 2022, rates exploded and Zim made insane amounts of money. When the tariffs happened, shipping and trading stopped. The cargo stopped happening as much, and the values of Zim went down a little bit, which is one of the reasons why we talk to you about tariffs and one of the reasons why we talk to you about international trade because it directly impacts our ability to invest in the stocks that we're following. Their policy is to pay out a huge chunk of their profits as dividends as well. But as shipping rates have come back to earth, so have their profits and dividends. Its dividends is therefore massive, but highly unpredictable. So some months it's going to be up there, and some months it's not. Happy birthday to whoever's got a birthday in October, walking into November. Now, the December 2025 play is going to be grabbing this quarterly stock, even though it's irregular. We're going to only grab it if the payout projected is worth our while. Like last time it was saying 6 cents. The time before that it was saying 74 cents a share. We grabbed it when it was 74 cents a share. We didn't touch it when it was 6 cents a share. We skipped over it when it was 6 cents a share. Because it's a total wild card, it could be huge or it could be nothing, depending on what they've gotten for the quarter. So the estimated schedule is all over the place, but they have paid December dividends before. So let's tentatively pencil in the potential for an ex dividend date sometime around December 2nd, because the last time it had a valuable ex dividend date, it was on the 2nd of the month when we talked about it, I do believe in July, right? So this is purely speculative and it depends on their announcement, which is why we have to go and find out what their announcement date is going to be closer to the middle of November. But whenever we get a news about the buy date, this is going to be the Friday before the second, which is going to be November 29th. So we're probably going to be selling PSEC, Orchid Island, and all that stuff on the 27th, clearing it on the 28th, buying on the 29th, so that we can be in possession of Zim stock for the second. This is what we did last time, uh, 6 months ago, because we skipped over the last quarter. So 2 quarters ago, this is what we did, and this is going to be a big question mark for us. We'd have to wait for their official announcement, probably later this month, but we'll be able to get it. A Zim trade is the ultimate gamble in this strategy. And let's say that they surprise everyone and declare $1.50 dividend like they did one time before, while the stock is at $20. That's still a 7.5% price drop, and we'd have to recover from it. So a quick recovery is anything but certain. And as the price is driven by economic news, not just technicals, we can see all kind of changes happening. But since they're not talking about tariffs right now, since there's not additional tariffs being added anywhere. This particular quarter, it should be stable, which means that what happens should happen right about the ex dividend date. Now, the risk here is the highest risk trade on the calendar. The dividend is a guess mark, and the stock is insanely volatile, and the industry is cynical. Okay. But the only thing we're going to do is try with the money that you are fully prepared to lose or have get stuck in a losing position for a long time. If you're not willing to get into this one because you feel like it's too volatile, you skip over it and go for something that you feel more safer with. I hit it and I get mine. Like Lil Wayne said, I only need to see what it's like. One time is fine with me. Running it back in December. December also means we get another shot at our monthly payers. So AGNC and Orchid Island will look for another dividend at the end of December. Based on the history, the ex dividend dates could fall around Tuesday, December 30th, or maybe Monday, December 29th. PSEC is going to have an ex dividend date, will likely land just around or after Christmas, maybe around Friday, December 26th, with a buy date on Christmas Eve, which is often a half day. By layering these recurring monthly plays with a high stakes gamble like Zim, our December calendar is designed to find opportunities right up to the end of the year. Now, we've built the calendar and the strategy. Now we have to talk about one thing that could turn profitability looking like a valuable plan into a loser: taxes. If you ignore this, you're going to get a nasty surprise in April. When you do this strategy, you're creating two types of income, and the IRS taxes them very differently: qualified dividends and ordinary dividends. Qualified dividends are taxed at a low long term capital gains rate, 0%, 15%, or 20%. To get this rate, you have to hold stocks for more than 60 days around its ex dividend date. So let's be crystal clear. With this strategy, you are not getting qualified dividend amounts, period. We are holding for days, not months. Ordinary dividends are what we'll be getting, and these are taxed at your regular income tax rate in addition to whatever money that you're making anywhere else. Pay attention to that. The same as your paycheck. So for most people, that's as much or higher rates like 22%, 24%, or 32%. On top of that, any profits you make selling the stock itself will be a short term capital gain, which is also taxed at the same high ordinary income rate. So let's look at our successes. AGNC trade again. We made a pre-tax profit of $67.60. If you're in the 24% tax bracket, you'll owe $16.22. Your real after-tax profit, just $51.31. This is why you have to track everything. The high yields are tempting, but remember that big chunk is going to Uncle Sam. Now you might think, I'll just do this in my Roth IRA and avoid the taxes. Not so fast. While there isn't a specific IRS rule against it, this strategy is terrible fits for a Roth. You'd be wasting the powerful tax free growth potential of that account on a short term tax inefficient income. And this strategy is not something that you want to lean on. It's like using a Formula One car to deliver a pizza. It works, but it's a huge waste of what makes it special. Now, let's start building our calendar by laying out our rotation plan. November is incredibly busy and gives us a perfect opportunity to put the capital rotation strategy to the test. Remember, all X dates are estimates based on historical patterns and need to be confirmed before you start buying and selling into them. So you want to make sure that you check the dates, double check the dates before you start running around all willy nilly throwing down. But kicking off the month, Our first target have the same X dates, Wednesday, November 5th. Global X Super Dividend Fund US DIV. This is an ETF. Uh, and this one's going to have a high stock. Might be less volatile than a single stock, but it's still going to be there. Shell, the gas company. I'm going to put all of these up here in one fell swoop. That way you guys have it, and then I'm going to pop it up on the screen for you. That way, if you come back to the show to take a look at it, it'll still be here. Uh, this one is going. This is the just like the Exxon Mobil and Chevron gas companies. This is a major energy supplier. Its prices is more tied to oil prices and global news than just its dividends itself. The play here, buy dates for both Tuesday, November 4th. You'll have to choose one or split your capital between them. Once the market opens on November 5th, you lock in your dividends, and your goal is to either exit the position at or above the entry price or hold if you want to keep these as part of your core dividend rotation strategy. Trade number two is going to be mid-month energy and real estate. With capital freed up, we can turn to the second week. We again have two stocks that, with a forecast X date of Friday, November 14th, our Arbor Realty Trust, which is an MREIT, has high yields. These are risky and very sensitive to interest rates and news. ExxonMobil is the other oil company that we're going to grab. And one of the things that I wanted to talk to you guys real quick about, because this is another energy giant similar to Shell. When you're doing your dividend rotation strategy, remember I told you that there is the qualified dividends and the non-qualified dividends. The qualified dividends are the buy and holds. If you're grabbing a lot of these for buy and holds, you will have the 0% qualified tax for a certain percentage of your valuation. Then whatever you're doing a dividend rotation strategy on, those are going to be the ones that are going to be ordinary taxation. If you're trying to build a portfolio that exclusively operates off of an average of about 17% interest, where the majority of your values is on the higher, more volatile stocks, but you're doing a buy and hold instead of rotating out every month, then you can just take your dividends and reinvest them back into whatever stock dips and keep your position on those portfolios and only potentially have to ride taxation on the dividend payout, if anything. Or you can do the rotation strategy and just get taxed ordinarily on all of your whatever you're trying to do. But the play here with Arbor Realty and ExxonMobil, they have a date of Thursday, November 13th. And again, you must choose or split. The yield of ABR is tempting, but Exxon may offer more stability. The goal is to exit on the 14th, buy on the 13th, exit on the 14th. As soon as you try to capture the recovery, you're out. Trade three, a quick two-step. Now we can get a chance for the true rotation. Step A, Gladstone Commercial, another REIT. I told you I grabbed majority dividends, which is crazy. And this one owns physical properties. Its estimated ex-dividend date is Monday, November 17th, which is a few days after the 14th. The play here is that we buy on Friday, November 14th for this one, which is going to be a little bit complicated because we're selling on the 14th for the other one. So we're going to have a separate quantity of investment capital to get this one because we have to sell on Friday for the other REITs in order to buy into this one for these REITs. Either way, we're buying on this one for the 14th, and then we're going to have it for the ex dividend date for Monday the 17th. And we aim to sell this one immediately and redo that uh, uh, deployment of capital for step B, which is Chevron. So if based on what we're talking about right now, if we split our money, if we're dealing with $10,000 and we split our money, we do 5,000 and 5,000 when we have two stocks on the same day. Now we're thinking about, well, what if we have two more that we've got to buy into, but the money hasn't been released yet? Now you're talking about $20,000 being rotated into four different stocks around about the same time, where money is freed up as money is being held down. And by the time money is freed up, money is being held down. And you're still rotating in and out of multiple different stocks at the same time and drawing back a return off of the same $20,000. Now, Chevron, CVX, we're going to add this one to the list. And don't worry, I'm going to give you all of these in a straight line. So you're going to see them after we get through this list so that you know exactly what you're going to be grabbing. And I'm going to put them up on the screen so that you guys can see them. This is going to be the third energy major on our list, and it has an estimated ex dividend date of Tuesday, November 18th, which is the day after the 17th when we're supposed to sell with Gladstone. Now, likely, if you're using an ETF trade fintech app, if you sold the first thing in the morning on the 17th, your money is freed up first thing in the morning on the 18th, but the ex dividend date is the 18th. So remember, I told you you're going to need separate sets of cash. The money that you freed up on the 14th is not the money that you use to buy Gladstone, because Gladstone you had to buy in on the 14th and money was clearing on the 14th. The money that cleared up from selling ABR stock is the money that you're buying into Chevron stock. The money that you bought in the Gladstone stock is money that is pending being freed up because you just sold it on the 17th. But again, you're going to take the funds from a successful trade and then buying the CVX on Monday, November 17th. You're going to hold for one day, capture the dividends, and then sell it. This is a perfect example of rotating from one opportunity directly into the next. Trade number 4, the Thanksgiving gauntlet. The week of Thanksgiving is the most crowded of the year and requires careful planning because DHT Holdings is also on the roster. Now, we haven't talked about DHT Holdings for about 6 months now, but DHT Holdings is one that we need to take into account. It's a tanker company with a high but variable dividend. Estimated ex dividend date is Friday, November 21st. We buy on Thursday, November 20th. Johnson and Johnson, and I know everybody knows Johnson and Johnson. Johnson and Johnson is a stable healthcare giant with a lower yield. Now, when I got to, by the time I had gotten to Johnson and Johnson, we were talking about Donald Trump's Trump accounts that he was getting for all the kids, and I was evaluating what type of stocks would Donald Trump use for those Trump accounts, and then I found all of these other dividend-paying stocks that are blue chip companies that are widely recognized, that everybody knows they're expensive in comparison to the other ones that I was talking about, but they do still pay dividends. So they have growth on their side and they have dividends to pay out, which is beneficial for you if you're trying to have the type of portfolio that you can leverage for a cash loan or a line of credit that allows you to buy things off of the value of your stock portfolio and then take your dividends and pay back that loan or pay off that line of credit. So it's good to grab these, and that's why we have it at the bottom of our screen. Now, Tuesday, November 25th is going to be the ex dividend date. So we want to buy it before November 24th on Monday. Prospective Capital coming back around again is that monthly paying business development company with that very high yield that we talked about before. Uh, this one has an ex-dividend date of Wednesday, November 26th. So we're going to buy in by November 25th. Now, we just said that we're buying Johnson & Johnson on the 24th for the 25th. We have PSEC that we're supposed to be buying for the 25th to have the ex-dividend date on the 26th. Clearly, we're going to be using two separate stacks of cash for that because while Johnson & Johnson is clearing, we're buying into PSEC. So we would have to be clearing money from something else earlier this month that would be buying into Johnson & Johnson while we're taking money that has already been cleared to go buy into PSEC. So you're going to be having two different tracks of money that's going to be rotating in and out throughout the month in order to hit more dividends. Okay. Now, the Thanksgiving crunch, Thursday, November 27th. This is Thanksgiving and the market is closed this day. This is a critical that you have to pay attention to. Several stocks go ex dividend on Friday, November 28th. So this is going to be the other issue when it comes down to what you're putting your money onto. Ellington earn AGNC, Orchid Island. This is going to be a big list. And Stag Industrial are all going ex dividend at the same time. Okay. Now, the capture for any of these is that you must buy on Wednesday, November 26th, which is the day after Johnson & Johnson, which is a whole nother stack of cash. With 4 high yield options on the same day, you have to decide where to allocate your capital. The MREITs, such as Earn, AGNC, or Orchid Island, carry highest yields, but also the highest risks of the price drop that won't recover. And then, so let me go ahead and put these up there for your November trades. And let me go ahead and make sure that I grab this whole list so that I can give it to you guys over on the Twitch and Twitter side. So I want you to take a look at this list. This is your November list, guys. That's a whole whew, tickers and all, full names and tickers and all. You can find that. So if you come back and watch the show tomorrow, later this week, later this month, so that you can get those tickers for November, that is the full list of tickers so that you can grab those stocks, see what the price values are, pick your shares up, and grab your dividend rotations. Mark them on your calendar. We got cell phones these days. Get on your cell phone, mark the calendar, mark the days that you're going to buy, mark the day that you're going to sell. If you're going to do this quarterly, you can schedule it every 3 months to remind you to check these dates and times so that you can always be notified. A, buy, A, sell, and you don't have to worry about missing out on any of your money. Now, December, we're going to give you the rest of the list for December. And we still got plenty of time. We got like 20 minutes. We're almost at the end. So since we have another round of payoffs and a chance to make a little bit more high stakes trades right before the end of the year, we're going to go ahead and get into that one. First trade that we're going to get, we're going to try to grab Zim stock, assuming that they're going to be paying us a larger dividend this time around than what they did last time around. Being that cargo shipping company known for its massive but highly unpredictable dividends, December plays that Zim is scheduled to be irregular, but we're going to speculate a potential ex-dividend date for Tuesday the 2nd. This would require us buying Monday, December 1st. The dividend amount is totally unknown until the announcement. A Zim trade is a pure gamble on a quick recovery from what could be a huge price drop So the risk is extreme, but that's okay. We're gonna see what's going on with that one. And after the Zim's excitement, the calendar spaces out a bit. Uh, SCHX ETF. This one is got a low yield. Estimated ex dividend date is December 11th. Buy on Wednesday, December 10th. This is a low risk, low reward, stable play. Then Essex Purity Excess Property Trust. That's the one. Excess Property Trust. It's a real estate residential investment trust situation. Estimated ex dividend date Thursday, December 18th. Buy date Wednesday, December 17th. So from the 10th, we've got a 7 day gap between the next buy in date. The final holiday rush is going to be just like in November, the end of December. And this is going to be packed with monthly and quarterly payers. And that's complicated by the Christmas holiday. Again, we're going to have Prospect Capital PSEC because this is a monthly payer back for its monthly dividend. Estimated date for this one is going to be Friday, December 26th. Christmas is going to be Thursday, the 25th. So the market is going to be closed, which means you're going to have to buy on Wednesday, December 24th, which is often a half day of trade. So you're going to have to do it first thing in the morning. You can't wake up at noon and be like, oh, snap, I forgot. You're going to have it scheduled at crack of freaking dawn so that as soon as the stock market opens, you're getting in there. Orchid Island, X date is Monday, December 29th. You'll be able to buy on Friday, December 26th. But because it is December 26th, you're not going to be able to take the money from PSEC and put it into Orchid Island. They're too close together. AGNC and REM ETF, which is a whole nother stock. Both of those are high yield monthlies that share an estimated ex dividend date of Tuesday, December 30th. The buy date for these is also going to be Monday, December 29th, which means that from the 26th, you're not going to be able to clear. If you don't own it by the 29th, you're not going to be able to get the money on the 30th, which means if you sell on the 26th, anything that you sold on the 26th, you would have the money for Monday the 29th to buy. But if you were holding on the 26th, on Monday the 29th, you're not going to be able to use that money. So this conflicts with holding Orchid Island. You're going to have to choose or split your money. AG Mortgage Investment, MITT, yet another one. So this is a lot of going all in, all over the place. And our financial trade, our final trade of the year is going to be here. This MREIT has a forecasted ex dividend date of Wednesday, December 31st. So that play is to buy on Tuesday, December 30th, potentially with the funds from selling AGNC or REM if the money clears by that time. This rotation strategy is going to be extremely intense because it requires precise execution and a clear understanding of the risk at every step. So I'm going to go ahead and give you these so that you have them. And y'all sitting there with a pen and a pad taking notes because I and Danny Stefan from Twitch. That is a lot of stocks. And that's the list that we got going across the bottom of the screen. This is why I'm telling you guys, if this is a very beneficial situation. Now we've built the calendar and the strategy. And now that we have talked about the one thing that can turn the profitable looking plan into a loser, which is taxes, if you ignore this, you are going to get a nasty surprise in April that you're not going to like. So I want you to make sure that when you do this strategy, that you are creating two types of income, and the IRS taxes them very differently. You are going to make sure that you are building your qualified dividends from buying and holding certain stocks that need to be bought and held. Then you're going to be doing a dividend rotation strategy on the ordinary dividends taxation, which is going to allow you to make a little bit more money with a lot less. And since the qualified dividends, as I told you before, are taxed at lower long-term capital gain rates of 0%, 15%, or 20% in situations where it is um, 60 days before the ex-dividend date and 60 days after the ex-dividend date, which is 121 days total, those buy and holds are going to be 0, 15, and 20%. To get these rates for the stocks, you have to make sure that you're holding the stock for more than 60 days around that ex dividend date when it does pay. So let's be crystal clear. With the strategy that I'm talking to you about right now, you are not going to get qualified dividends if you're going to buy and sell every single month, period. Because we're not holding for days. Well, we're holding for days, we're not holding for months. But you can pick up all of these very same stocks and hold them and then rotate into each one of the stocks as they go down the dividends from the previous time that the stock paid out. That would aid you in doing the qualified dividends. Ordinary dividends are what we're going to be getting, but these are taxed at the regular income tax rates, the same rates that your paycheck is getting. So make sure that you note that, because I said that earlier, but I'm saying it again because it was almost an hour ago when I said it. And for most people, that's going to be somewhere between 22 and 35%. On top of that, any profits that you make selling the stocks itself will be a short term capital gain, which is also going to be taxed at the same high ordinary income tax rate. So if you're buying stocks and you're getting a chunk of change from the sell, you're getting a chunk of change from the dividends, and you put all of that stuff together, you're going to end up throwing out a decent quantity of taxation, but it's not going to be more than the quantity of taxes that you would have gotten had uh well, it's not going to be more taxation than what you would have gotten had you do a buy and hold. You're going to be making more money, but you're going to be paying more taxes because you're making more money. Okay, that was a lot. I know. We've gone from the flawed, simple idea of dividend capture to the uh, building a detailed capital rotation calendar. We've broken down the risks and mechanics of trading over a dozen different stocks in just 2 months. Now you have the real roadmap of the end of 2025. You have the framework. So I encourage you, take this template, open a spreadsheet, and start building your own version. Do your own research, double check those historical dates, and decide on your own risk tolerance. And I want to hear from you guys, because my question is, what high yield stocks are on your calendar for the end of the year? Are there any monthly players that are special situations that I missed? Make sure that you drop it down, because I remember that one of the fans on the show had mentioned to me about BBAI. BBAI is a growth stock. I'm giving you ex dividend stocks, but BBAI was added to our stock list that we're following so that you would have the best opportunity to make the best trades. So make sure that if you know about a stock that I didn't talk about today, that's a very good stock that whether it pays dividends or not, like Netflix stock. If you want to do some Netflix stock, we covered WWE stock. I mean, which is owned by TKO. If you have a stock that you think is a very valuable stock that shows good results, share your ideas, because it'll help everyone become smarter traders. We don't have to rely on Wall Street when we have fintech apps that we can trade ourselves on our cell phones. And if you found this breakdown valuable, I want you guys to make sure that you do me a favor and hit that like button. It tells the algorithm that investors are looking for detailed, no fluff content like this. And make sure that you subscribe so that you don't miss out on follow us where we review the actual results from this calendar. If you guys are watching us from Twitter or Twitch, if you hit that follow button and hit the heart button over there, like the show, you should be getting notified as well when we go back live talking about more stock options. But we're live 7 nights a week. So if you make it a point to break out a section of your afternoon every time around the same time to be here for information, we're going to be giving you guys updates and information throughout the week, throughout the month. Okay. So, what's the bottom line here? The dividend capture strategy is tempting, but most people fail because they don't respect how the market works. Success isn't about just buying before the X date, it's about strategically picking stocks that have a fighting chance to recover from the guaranteed price drop. It's about understanding you're not just capturing a dividend, you're actively trading the volatility around it by rotating capital from one opportunity to the next. Our calendar for November and December 2025 shows this strategy in high action. We've built a dense schedule, rotating through monthly payers like PSEC and AGNC, stable giants like Exxon and Johnson & Johnson, and high-risk gambles like Zim. But this is not a free lunch. We have to be honest about the risk. The price recovery is never, ever guaranteed. And the tax hit is real. This is an active, high effort strategy that requires you to stay on top of your trades, keep good records, and handle your emotional swings. For a lot of buy and hold investors, the risk and effort probably aren't worth it for them. But for active traders who are willing to do the homework, building a dividend capture calendar on top of your core satellite portfolio can be a powerful tool to generate income where the hardest part of your day is watching your trades. You're working in your underwear now. Use this knowledge to build your own plan and manage your risk and aim to finish the year strong. So, with that being said, I'm going to start off by saying, ladies, as long as the situation doesn't make sense, I'm going to keep asking you, ladies, to make it make sense. So, ladies, please make it make sense. Fellas, I give y'all this information to help you guys become higher value men because you can improve your financial life just by taking this information and putting it into action. And then on top of that, I'm going to help you guys with improving your personal life so that you're not damaging your business life with your personal decisions and you're not damaging your personal life with your business decisions. But ladies, this is a uniform podcast. We're about 54% male driven podcast right now from the male perspective, where ladies, y'all can come here and make yourselves higher value women as well, taking this exact same investment opportunity, doing your own research, investing in yourself, building a trust, and setting yourself up for success, generational wealth. And then you can utilize this type of knowledge to back up when you're trying to find a partner. Because if your partner has the same business savviness that you do, or something remotely similar where y'all can learn from one another, you now have not only a romantic partner, but a financial partner that will aid you in early retirement. We should be able to do, we didn't do it when we were younger. In our middle ages, those of you that are 35 to 45 years old, we should be able to right now start our 40-year plan to put ourselves in a position that by the time we're 65, 70 years old, we can quit working and not have to depend on Social Security disability. That is what we're working on with this show. Financial freedom, reasonable retirement, if not early retirement, because if you're watching the show and you're in your early 20s, your 20-year plan will have you quitting your job by 45. By 50, you are not working for the rest of your life. Everyone else who's starting this late in the game, we're fixing credit, we're fixing our finances, we're fixing our spending habits, and this will lead us to a potential opportunity to travel the world, maintain our standard of living here in the United States, and not have to show up for work at all from the moment we quit until the moment we die. This is what the American dream was supposed to be about, building the type of life that we can rest and enjoy the rest of our time with our loved ones. But first things first, we have to do the work, do the research, and start building. So With that being said, I want to thank you guys for coming to this and that. I'm your host, Xander, where we talk about this, that, and everything in between. And I'll see you guys.
Higher ground. Used to chase validation, now I validate myself. Building inner strength, putting doubt upon the shelf. No more unnecessary drama, no more wasted time. Climbing higher, constantly making my own climb. Standing on higher ground where excellence is found. My potential knows no bounds, raising the bar, breaking ground. My network is my net worth. Choose your company wise. Surround yourself with eagles, not with sheep in disguise. Every interaction is a reflection of my brand. Quality over quantity, that's my personal command. I'm not landing on higher ground where excellence is found. My potential knows no bounds, raising the bar, breaking ground. I'm not just living, I'm manifesting my vision, cutting through limitations with surgical precision. My expectations are my compass, my respect is my shield to mediocrity and chaos. I will never I'm not just living, I'm manifesting my vision, cutting through limitations with surgical precision. My expectations are my compass, my respect is my shield to mediocrity and chaos. I will never yield.